The second announcement relates to the RBI Retail Direct Scheme and introduction of a mobile app to operate in the RBI Retail Direct Scheme. The Reserve Bank Retail Direct Scheme was launched in November 2021 for enabling the retail investors to participate in the GSEC market, both in the primary as well as in the secondary market auctions and operations. It is now proposed to launch a mobile app for accessing the Retail Direct portal. This will be of great convenience to retail investors and deepen the GSEC market further. The next announcement relates to review of liquidity coverage ratio, that is LCR framework. Technological developments have enabled bank customers to instantly withdraw or transfer money from their bank accounts. While improving customer convenience, this has also created challenges for banks to deal with potential situations when, due to certain factors, a large number of depositors decide to instantly and simultaneously withdraw their money from the banks. The developments in certain advanced jurisdictions during the last year demonstrated the difficulties it can create for banks. The difficulties it can create for banks to deal with such situations when there is heavy outflow of heavy outflow or transfer of deposits. And this happens only if that particular bank is in an acute stress. It's not a normal thing which happens, but then the banks will have to remain prepared for all eventualities. A need has therefore arisen to undertake a comprehensive review of the LCR framework for banks. A draft circular will be issued shortly for stakeholder consultation. Our approach is to have a balanced approach, and as I said a little while ago, we follow consultative approach, so therefore the draft circular will enable the stakeholders and the banks to give their views and opinions and suggestions, which will be taken into consideration by the Reserve Bank before arriving at a final decision. The next announcement relates to dealing in rupee interest rate derivative products for small finance banks. At present, small finance banks are permitted to use only interest rate futures for proprietary hedging. It has now been decided to allow small finance banks to use permissible rupee interest derivative products. This will allow further flexibility to small finance banks for hedging their interest rate risk and enhancing their resilience.